Hello guys, welcome back to the channel. In today's video we are going to be doing an update on my ISA stocks and shares portfolio. We've had a bit of a rebound in markets, so I'm going to talk you through my standard Excel spreadsheet where we've got all the different funds and the performance and all that sort of stuff, and then we're going to go on to TrustNet and look at some charts and talk through basically what's happened over the last couple of weeks or so. As I said before we start, this is not financial advice. This video is for educational and entertainment purposes only. Please do your own research. This is not financial advice. So with that said, let's come onto the laptop. So here we are on the Excel dashboard. First thing to note is I haven't yet been paid. Still a couple of weeks off, so no further contributions. We are still on £11,100 total contributions, and the value is £10,319. So since the start of this series, we are down £781 or 7.04% of our initial investment, which obviously isn't great, but as you'll see when we come onto the screens, it's been a tough time for markets with Trump and everything that's happened, so it's hardly a big surprise. What is still reassuring to see is the defensive parts of the portfolio are doing exactly that. They are being defensive. So we've got around £3,000 in insurance, and then we've got £1,000 each in Fidelity Special Situations, which is a UK fund, and Global Health and Pharma, which is obviously a global healthcare equity index. And they are down despite all of Trump's interesting tariffs and all of the turmoil in global markets, and especially despite the health and pharma and insurance fund being mostly US dollar denominated, which has been quite weak recently, and therefore compounded losses. They are only down 1% to 2% respectively. So I'm quite happy with that. In such times, I would expect those funds to outperform, and they have, which is good. But you can see it's been a different story for my more aggressive holdings. So BlackRock, Global Unconstrained Equity, the Tech Fund, and US smaller companies have all been not treated the best by the market recently, let's say. Global Equity Unconstrained, again, lots of USD holdings, so I think the underlying stocks will probably be down about 6-7%, and then the rest of that is US dollars. And obviously for US smaller companies, it's been a pretty brutal time all in, so the stocks and the currency. Tech, again, quite aggressive. All of this stuff, all of those three are quite sort of rate sensitive and quite uncertainty sensitive. So with Trump coming in and causing chaos, let's hide that quickly because no one wants to see that. With Trump sort of coming in and causing some chaos, it's not been a great time. And we've also had some sort of growth scares. So again, similar, it's sort of related to Trump. The Department of Governmental Efficiency, or Government Efficiency, headed up by Elon Musk, are seeking to cut US government spending, which should translate into lower GDP, all things kept equal. So lower GDP basically means lower economic output, which should, theoretically translate into lower corporate earnings, especially on the small cap side and the more cycle sensitive stuff. So again, the stuff that BlackRock will hold, the stuff that Henderson Tech will hold, will be hit harder, and that's why they're down the way that they are. If you do want more details on that, I have got videos of, I haven't got smaller companies yet, but the other two are on my channel, so go and find those. But yeah, like I say, it's been an interesting time. It's been a bit of a rough time. We'll jump over to the charts now and sort of assess the damage and assess what's happened. And this sort of recent small recovery, we'll see where that's come about from and how it's translated into my portfolio. So here we are on TrustNet. This is my analysis sort of website. You can see my portfolio on there, the one that we've just been going through since the start of February. So I started this series properly, like I invested all the money on the 14th of Feb, so around here, which again is sort of great timing. But yeah, it's been a bit of a bloodbath. I think we all, as I said in the previous section, Trump's caused some carnage, and that's been playing through into the portfolio. But if we break it out into the constituent funds, you can see again that story between the steady stuff and the more sensitive stuff. Polar Capital Global Insurance, I'm really happy with how that's performing, especially given the USD weighting. Like, I would expect that to be down around the 5% mark, so the fact that that's holding steady is quite good. The UK side, the UK's been pretty sort of left out of Trump's first wave of tariffs anyway, so that's where that strength has come from. And it's not a very business cycle sensitive index. Like the UK, you think about the US, huge tech weighting, whereas the UK, the boring stuff's at the top of the index. So banks, oil companies, and the oil price has been relatively stable, or at least more stable than what's been going on in the US. And then you've got like tobacco companies and things which are almost completely business cycle insensitive. You've also got AstraZeneca, which is actually, I think, the biggest weighting, or maybe the second biggest weighting. I should know that, but I don't. Which is the healthcare company. So yeah, the stable stuff is performing how I'd like it to. If you've watched the previous episode, you'll know that I got paid on the 7th of Feb, and when I did, I topped up on BlackRock, and I also topped up on I think I topped on all three actually. So sort of trying to buy low and inevitably sell high, but I don't expect to sell anything on this series. I think it will just be accumulation. But yeah, anyway, if they continue to fall when I get paid on the 7th of March, sorry, not March. All of those months were wrong. So when I said Feb, I meant March. When I get paid on the 7th of April, I will probably be buying more into these beaten down areas of the market. Smaller companies scares me a bit, to be honest with you. It's down quite a lot, so in some ways it makes sense to be as aggressive as possible. But yeah, there's a lot of uncertainty in the US. I think BlackRock continues to be my sort of the one I'd opt to put more money in. I put the most into that. I know I put the most into that of the buys last time around. So again, for a quick recap, that is effectively BlackRock's best ideas for the next, one team of BlackRock's best ideas for the next 10 years or so. So part of the top 10 is Microsoft. You've got LVMH, the luxury goods company. You've got Novo Nordisk, which does the weight loss drugs. So it's all quite growthy stuff, quite stuff to be excited about going forward. So that's fine. I'm going to jump over to another chart now. I just need to think about what I want to put on, and then we'll jump to that. I couldn't really find another chart that I wanted to show. I think I've sort of covered off the bulk of what I wanted to share. I'm thinking about maybe introducing some news stories and incorporating that into these videos, but for now I'm going to stick to the portfolio itself, and then maybe going forward we can think about news and stuff like that. But what we've got here is the split by region, so the portfolio and how it's broken down by location, which is the same thing, just said in two different ways. You can see that the USA is 63.3%, which on first glance may seem quite high. I mean, a lot of you guys, I'm sure, will be invested in some sort of US equity tracker, which is obviously 100% US, or maybe a global fund. And I think the global index at the moment is 65 to 70, maybe even pushing 75% US. And as a UK investor, that's not been great. So as per Trump's fund, the US dollar's fallen quite a lot recently. And what that's meant is any holdings that a UK investor will have in the US will have fallen, firstly from a direct stock impact, and then secondarily from the US dollar falling. So in 2022, when we had the crash sort of thing, the slow bleed in 2022, the US dollar actually went up. So from a UK investor's perspective, it would have seemed, not too bad. It would have probably hurt, but not seemed too bad. If we'd have had the reverse effect, so the USD falling on top of the US stock market falling in 2022, anyone invested around that time would have seen probably losses of 40 to 50%. So it's just thinking about that narrative in terms of what you see online, especially in UK-based forums and things like that, is always the S&P 500 is the only answer. UK is uninvestable, Europe's uninvestable. And I can see why they think that. I mean, most of them are completely uneducated for the first point. They've got no idea about finance. But the second point is it has outperformed everything over the last 10 or so years. But what I'd like to just touch on quickly is the fact that doesn't always happen. And actually that's a good idea. For another video, I'm going to do how the USA does not always outperform. There was a decade between the early 2000s and pretty much 2012-ish where you'd have broken even on the US index. There was a time in the 70s or 80s, I think, where you'd have spent 13 to 15 years without seeing a positive return on your investment in the US. And I feel like we could be sort of approaching that point now. I mean, it's not something I'd be willing to bet the house on, as you can see by my portfolio. But yeah, I mean, you'll see so much buzz around the US index these days, and I just think it makes sense to be a bit careful about that. Maybe pick where you're investing. Not financial advice, but it's what I like to do. There will come a time, I'm sure, hopefully not for this series, but maybe elsewhere, where the US index becomes really attractively valued, and I will go all in the US. As I've said in previous videos, it is the most capitalistic economy, it's the broadest, most liquid, most deep stock market. There is so much opportunity in the US. However, there are times when it does underperform, and who knows, maybe one of those times is now with what Trump's doing. Maybe he disrupts things so much that the US enters a recession, and maybe more so than other places in the world. So yeah, I mean, I'm not really sure where I was going with that. It was a bit of a rant, wasn't it, to be honest? But yeah, I'll do a video on that, and it will make hopefully more sense if you've watched this video, which, to be honest, most people have clicked off by now. But if you're still here, thank you. But yeah, that's the video. Again, bit all over the place. I still haven't got a proper format for these portfolio update videos, but I'll get there. If you enjoyed it, please leave a like, subscribe, and I'll see you in the next video.